So here is another case study, model case study. This is the basic instruction. All case study we have 100 marks for 4 hours, and the instruction check the question paper, etc., and answer, etc. Total is just for the instruction. And this is the requirement within the case, and that type of requirement can be happen. Sometimes maybe change. Here executive summary we will get 15 marks, and another 5 requirements is here, totally 100 marks. So we know the business case study are usually summarized of real life business scenario, or etc. And here in this case is the name of the company or group is FIR Corporation. So for the FIR Corporation, here there are 5 exhibits including here. One is about the FIR's Corporation and information regarding merger of a company A, because company A, FIR is going for taken over of company A, and one trial balance as a holding company of FIR, and one is a subsidiary of AS. And there are some proposed credit policy change of FIR, and some are working capital management issue for FIR. There are 5 exhibits. All exhibits here including here. Number 1. So here saying that FIR Corporation. So first of all, who I am, what have to do. So I am, that means you are a recent qualified general accountant and have accepted a job as associated financial controller for a well-established family business which supplies equipment to entrepreneurs both online and from the wholesale outlet. So my role is that I am a qualified general accountant and I accept a job. The job is as a associate financial controller, a well-established family business. Business is supply of equipments to entrepreneurs and through the online, also the wholesale outlet. So it is the fundamental things. So we should underwrite this key point. Its customers range from enthusiasts, amateur through to the part-time professional and owners of the busy business. So who are the customer of that firm? Some part-time professionals and some are owners who are the busy in the business side. A credit policy is a set of guidelines. So he is saying that what is the credit policy? A credit policy is saying a guidelines that set a credit and payment terms for customers and establish a clear course of action for late payment. A good credit policy will generally do 4 things. Number 1, determine which customers are expected to credit and bill. Set the payment terms for parties to whom credit is extended. Define the limits to be set on outstanding credit account. Outline the steps or procedure used to deal with delinquent accounts. The customer's payment method. So here is the for FIR Corporation. The customer's payment method of FIR Corporation reflect their diversity. There are debit or credit card transaction and customers within 30 days credit business account. So this is the key factor of this point. There is also a surprisingly large number of customers who collect their goods from the warehouse and pay in cash. So they are using their debit card, credit card transaction. Also, larger amount is paying the cash. Who are collecting the goods from the warehouse? You are told that cash payment probably reflects the nature of the customer's own receipt. Customers will often be paid in cash. So you are told that cash payment probably reflect the nature of the customer's own receipt, as some customers will often be paid in cash for weekend. That means after a week, customer is paying the amount. In your first month, that means who am I? I am a associate finance controller of this FIR enterprise or corporation. So in your first month, the sale director, look here, this is the key point. The sale director, the principal shareholders, close family relatives. So sale directors is the family member or family relative, close family relative of that FIR corporation, brings you to a check in settle of the account of a major customer. He himself bring a check to you because you are the finance controller. They explain that the check which appear in clear the amount due in effect on overpayment, as the balance showing on the sale ledger is before allowing the bulk discount, which is calculated restrictively. The sale director shows you the calculation and the arrangement of the authorized by the board of directors. So here is the some logical thing is that here sale director, who is the conflict of interest, he is the close family member of the few shareholders of that company. He bring a check and want to settle few customers, major customers account, and saying that it is a overpayment. So the sale director stated that the customer's managing director has come to collect the discount in cash. So discount amount they want to collect in cash. They say that this is not a usual occasion for some of the companies' beta customer. It helps to maintain a good relationship with those customers, which lead to a purchasing loyalty. So this is the comment of sale director. Another benefit of this arrangement is to be gives the sales director regular face-to-face meeting with the senior staff of this customer. This is the argument of sale director. It also reduces the high chance in the bank make for handling cash. He asks to sale director why the customers referred to receive a refund in cash rather than simply pay net amount of need to settle the account. They reply, this is the smile and not further question in the customer moment. As is general accountant in business, which fundamental principle fears more promptly in the safeguard? What would be your key consideration for your approach to resolve that situation? What course of action would you take to resolve the problem? So এই সমস্যাটা আমরা সলভ করতে গিয়ে আপনি কি করবেন? এখানে একটা ফান্ডামেন্টাল প্রিন্সিপালে কোথায় আঘাত হানতেছে, এখানে বেসিক জিনিস বলতেছে। এখানে বোঝা যাচ্ছে যে সেল ডাইরেক্টর যে আছে উনি শেয়ার হোল্ডারদের ক্লোজলি ফ্রেন্ডলি এবং ওনার এখানে নিজস্ব কিছু মোটিভ রয়েছে। উনি বলতে চাচ্ছে যে আমরা যে ডিসকাউন্ট দিচ্ছি সেটা ওইভাবে না দিয়ে এটা ক্যাশ দিয়ে দিচ্ছে আলাদা করে, এবং ক্যাশ টাকা দেওয়ার ফলে উনি কিছু লজিক দ্বারা করেছে এখানে যে এর ফলে রিলেশন ভালো থাকবে, মেনটেন করা যাবে, লং টার্মে কাস্টমার থাকবে এবং আমার ব্যাংকের উপরে চাপটা কম পড়বে ক্যাশ হ্যান্ডলিং এর ক্ষেত্রে। পাশাপাশি এখানে আমরা তার সাথে ফেস টু ফেস তাদের সিনিয়র স্টাফদের সাথে দেখা হবে, এইসব লজিক দ্বারা করাইছে। তো এখানে বলা হচ্ছে যে আমি একজন প্রফেশনাল অ্যাকাউন্টেন্ট বা জেনারেল অ্যাকাউন্টেন্ট হিসেবে কোন কোন ফান্ডামেন্টাল প্রিন্সিপাল এখানে আঘাত আনতেছে এবং এইটা করা কতটুকু যুক্তিযুক্ত। This is a one point. And then second one, merger and taken over or acquisition are very similar corporate action. We know it. A merger involves the mutual decision of two companies to combine and become one entity. It can be seen as a decision made by two equals. A takeover or acquisition is usually the purchase of a similar company by a large one. It can produce the same benefit as a merger, but it doesn't have to be mutual decision. In merger and acquisition, the exchange ratio measures the number of the share the acquiring company has to issue for each individual share of the large company. For merger and acquisition, deals with include the share as part of the consideration, compensation for the deal. The share exchange ratio is an important matrix. Deals can be cash or share or mixed of the two. So that exchange can be through the cash, can be through the share, or both. If a corporation is considering merge with A Limited, so is the fundamental thing here. If a corporation is considering merge with A Limited, if a share are currently may transfer at taka 20, it has 250,000 shares and is earning after tax 5 lakh. A Limited has 1,25,000 shares. Its current expected market price is taka 10 and its earning after tax are taka 1,25,000 also. The merger will be effected by means of a stock shop or by exchange. A Limited has argued to plan under which FIR will often the current expected market value of A Limited share. So what have to do? What is the pre-merger earning per share and price earning ratio of both the companies? We have to determine it. If A Limited price earning ratio is 6.44 times, what is the current market price? So have to identify the current market price of A Limited, where price earning ratio is 6.4 times. What is the exchange ratio? So what would be the exchange ratio if FIR corporation taken over A Limited? What will FIR's post-merger earning per share? So after merge or taken over, what would be the EPS of FIR corporation? What should be the exchange ratio? Then what would be the exchange ratio if FIR pre-merger and post-merger earning per share are to be the same? So if the post-merger EPS and pre-merger EPS same, then what would be the exchange ratio? So that we have to calculate. And now exhibit 3, here saying that as a general accountant, you know that here describing the what is a holding company, what is a subsidiary company, and because here is the consolidation issue. So here holding company, a company is said to be the holding company of another if that other company is its subsidiary. A subsidiary company, a company is said to be a subsidiary of another company is if another company controls the composition is board of directors holding more than 50% or 51% of the nominal value of the equal share capital. And minority interest, we know it. What is minority interest? Minority interest is the holding of the general public other than the holding company. In a subsidiary company, it terms as a minority interest, and cost of control, the excess amount paid more than the face value or book value of the share by the holding company to acquire or controlling interest in the subsidiary company. এটা মানে হচ্ছে যে আমরা যখন একটা কোম্পানিকে সে হোল্ড করতে বা সাবসিডিয়ারি কোম্পানিকে একটা কোম্পানি যখন টেকেন ওভার করে নিচ্ছে তখন তার শেয়ারের চেয়ে তার শেয়ার ভ্যালুর ফেস ভ্যালুর চেয়ে যেই টাকাটা বেশি দিচ্ছে সেটা হচ্ছে তার কন্ট্রোল কস্ট কন্ট্রোল নেওয়ার জন্য যে এক্সেস যে টাকাটা দিচ্ছে এটা হলো কন্ট্রোল কস্ট এন্ড কনসিডার সামটাইম ইট ইজ গুড ভ্যালু গুডউইল consolidated balance sheet. The balance sheet prepared by the holding company by incorporating all of the asset and liability of its subsidiary company along with its own asset and liability. A subsidiary is a company that is controlled by the parent company. Here, parent company is holding company. The subsidiary act and the operation with the own entity, but it is still connected with the larger company or holding company. The parent company can create a subsidiary in one or two ways: by creating it from within the parent company, or by acquiring a control interest of an outside entity. So here, holding company can create subsidiary company here by two ways. Within the organization, they create new company under the supervision of the parent company, and another way they can acquire of a control of interest of another company from the outside, one from the building from the creation of the inside, another from outside. So two way a holding company or parent company can create subsidiary company. When there is a majority ownership of a control, the investors corporation guides the resource, business policies, and operation decision of the subsidiary. So it is the responsibility for a holding company to supervise, control, guide, establish the policy, operational decision for subsidiary company. Though entity separate entity, but it has some the control because of 50% or 51% control within the holding company or parent company. So here, FIR holding company has a subsidiary company for backward integration. The trial balance of FIR holding here denoted H and is subsidiary denoting S. Subsidiary is denoting S. So this is the trial balance of FIR holding company and its subsidiary company S. So where here holding company FIR holding company is denoting H and subsidiary through the S. So here is the trial balance of 31st December 2021. So here is the figure, that means fixed asset, closing stock, etc. All is here. And here's some additional information. Investment in S, so here a subsidiary company. Investment in S was acquired 80% of the equity capital and 50% of the preference capital, 80% of equity capital and 50% of preference capital, and the later being the part. Depreciation and fixed asset is as 10% per annum. Holding company sold goods worth taka 1,20,000 at a cost plus 5%. So holding company sold to its subsidiary company goods 1,20,000 taka at a cost plus 25% profit. So we have to do is consolidation. So we have to adjust with that profit. And 50% of these goods are still in stock in 31st December 20. So in the subsidiary companies' stock, there are 50%, that means 60,000 taka is still in stock, where adding 25% profit. So we have to consider this one. So this is a very simple consolidation it be. So here from the above trail balance, S and its subsidiaries, you are required to prepare consolidated P&L and balance sheet as on 31st December 2. So we have to do this one. So we should consolidate it and consolidate profit and loss account and balance sheet. Now Exhibit 4. A business credit policy can be simple or as complex as you would like it to be, but there are a few things you will want to include. Make sure that an effective tools. So is the business credit policy should be effective for the organization. The marketing director of FIR is giving a proposal to the board of directors of the company that the increase in the credit period along with the customer from the present 1 month to 2 months will bring a 25% increase in sale value in the next year. So here, one proposal from the marketing director is given to the memo to the board of directors that they want to change the credit policy through the credit period allowed customer at present 1 month, but he wants to increase in 2 months, and he's saying that if increase in 2 months from the 1 month, then 25% sale volume will be increased for the next year. So this is his argument from the marketing director. And operation data, we know it. Operation data means data deriving from the performance, use, and operation of the subscription service, including the number of the record of the subscription service and the number of the types transactions, configuration, and report to the proceed in the subscription services. Operational data will not include customers' confidential information. So customers' confidential information will not include through with the operational data. Operational data only for the operation purpose within the organization. The following operational data of the company of the current year are taken from the record of FIR Limited. Selling price of a unit of the product of FIR is Taka 21. So is the selling price of one of the products. Here variable cost is Taka 14 per unit. Selling price 21, variable cost 14. Basically, and total cost is Taka 18 per unit. So difference is 18 minus 4. So 4 Taka is fixed cost. Sale volume is 18,90,000 Taka. Here meaning the amount, not the unit. Because credit policy want to change the credit policy. The board, by forwarding the above proposal and data, request you to give your expert opinion on the adoption of the new credit policy in next year, subject to a condition that the FIRs require a rate of return of investment is 40%. So here, condition is that after placing the memo to the board by the marketing director, where proposal was that credit period change from 1 month to 2 months for the next year budget, that bring 25% increase in the sale volume for the next year, and here are the basic data: selling price, variable cost, total cost, and sale volume. Board of director, that memo brought to you for your expert opinion because you are the finance controller. And here have to think that the return of investment must be or within the required return rate 40%. So thinking the 40%, the proposal is viable or not, you have to give the expert opinion to the board. So we have to work on it. Number 5. Working capital management is also one of the important part of the financial management. We know it. So we know what is the working capital. Working capital is we know basically we can calculate is through the current asset, and we subtract for the current liability, then we will get the working capital. And working capital and that's current asset is the combination of cash, inventory, and other receivable, and current liability is the total summation of the current liability. That's within the 1 year we have to pay our obligation. Here our payment due within the 1 year, and sometimes creditors, etc., is the combination of the current liability. So from the current asset, if we minus the current liability, then we will get the working capital. And sometimes working capital can be hard, can be soft, and working capital management is vital, because if working capital is minus, then company cannot survive, because the short-term obligation they cannot pay. So working capital must be within the positive way, and working capital sometimes help to run the organization business or smoothly. So working capital management is an important part of financial management. It is a concern with the short-term finance of the business concern, with is a closely related thread between profitability and liquidity. So closely related thread between profitability and the liquidity. Efficient working capital management leads to improve the operating performance of the business concern, and it helps to meet the short-term liquidity. Hence, a study of working capital management is not only the important part of the financial management, but also an overall management in the business concern. So here describing the way of working capital, and working capital is described the capital was not fixed, but the more common use of the working capital was the consider in the difference between the book value of the current asset and the current liability. And working capital is a part of capital which is needed the meeting by the requirement of the business concern. For example, payment of credits, salary paid to workers, purchase of raw material, etc. Normally, it consists of the recurring in nature. So it's the recurring in nature. It can be easily converted into cash. Hence, it is known as the short-term capital. So also we can say it short-term capital means working capital. Now the proportion of FYR side. FYR is another small subsidiary company, FYR. So here another information, FYR Corporation has another subsidiary company. Its name is FYR M. Its level of activities of 30,000 units of output for the year. So FYR M output is 30,000 units, that is production in every year. The cost structure of FYRM is product for the activity level is given below. That means 30,000 unit activity. Here per unit raw material cost 20 taka, direct labor cost 5 taka, overhead taka 15, total cost 40 taka. And here making profit 10 taka each and every unit, and selling price is taka 50. Here, past experience includes that raw material are held in stock on an average for month. So, here is the issue, raw material for stock. We know there are three types of stock: raw material stocks, work in progress stocks, and finished goods stock. It's also called the inventories also. So here, raw material inventories here have to keep for 1 month. Another, work in progress, 100% completion regarding the material and 50% labor and overhead will be half a month production. So for the 15 days have to keep in hand work in progress, where 100% completion of material and 50% labor and overhead, that means conversion cost. Finished goods are in stock on an average for 1 month. So 1 month have to keep the finished goods is the inventory for 1 month. Credit allowed to suppliers 1 month, and credit allowed to debtors 2 months. If the supplier, this means creditors are and purchasing the material from the creditors, and you pay after 1 month. And credit allows to debtors who are the customer for 2 months. A minimum cash balance of 25,000 is expected to be maintained. So here 25,000 taka have to keep always in hand. So also a cash balance have to keep 25,000. So this is the total data, and from this data, if our requirement of working capital have to calculate. So it's another work. Here saying that a case study is a scenario in a particular professional context which you be expected to analyze and to guide the specific question posed concern the situation. In many cases, the scenario of case study involved in the number of issue or problem that must be deal with the professional workplace. It is usually required to identify problems and issue in the scenario to demonstrate the developing knowledge of this professional policies and make a decision that the recommendation based on the either prevent of the solve some of the issue in the scenario based on the statement analysis all activities of FIR corporation. So this is the as a model case studies here. So here we study it here. So what we have to do? So there are the requirement, also the mark distribution here, and we have to make a executive summary. We have to write an executive summary, and another 5 items we have to do. But after requirement A to E, if we complete, then we will be able to write up the executive summary. So we have to keep a blank sheet for executive summary, and then we go for the exercise or other activities. Then we have to, so from that executive summary we have to keep an blank page, and after completing all things, then we have to write the executive summary. So number 1 here, what was the direction of the firm of the question? Here said that number 1 here, which fundamental principle fears more prominently under safeguard, and how we will be able to solve the problem. So here is the theory. Number 1, key fundamental principles. As a professional accountant, we know as the IFA guidance or our institutional guidance, our integrity, objectivity, confidentiality, and professional behavior, we have to take care of it. So here mentioning our integrity, you have to consider the fundamental item, that means principle, our integrity, our objectivity, our confidentiality, and our professional behavior. So it's just describing each and every point. Then what should do? Consideration. So what would be the consideration in this case? Identify relevant fact. So here and marketing director proposal of cash payment of discount amount to the customer, that we have to consider it is that means here the integrity, objectivity, confidentiality and professional behavior, we cannot do it. So here I have to identify the relevant fact why we will not be able to do that, and identify affected parties, how this party affect, because the sale director, sometimes company's customer, the tax authority and other stakeholder, they will be affected, because sale director, you will get the money, that means undue benefit the sale director will get, and the real customer will not get the benefit, and tax authority also will not get benefit for cash payment. If the bank payment, that means that's identification and that amount to reflect to the financial statement of the customers. Who should be involved in the resolution? The sale director and maybe the charge of the government should be involved in the problem, and there are the trusted colleagues who can be discussed the position. So we have to identify the person who will be involved in the for resolution. And possible course action, what have to do? Possible course of action: you are currently unfamiliar with the procedure of your new employer, you should try to establish the extent of the issue. So this issue is the new to you, because you just joined here just within 1 week. You might achieve this by reviewing the sale ledger account that have shown credit balance in recent month and have subsequently been created by the cash refund. If your understanding is correct, this account will related to some of the company's major customers. So you should verify the ledger first and the company's activities, and having established the fact, you should discuss the issue with the sale director, and then, if necessary, the charge of the government such of the board members. That will also you can make the issue to the board of directors also, or your managing director also. In each cases, you should prepare of the meeting and try to the propose acceptable solution to overcome the problems. You may wish to discuss the issue, taking care maintaining confidentiality with a trusted advisor, a colleagues, other profession body. You should advise the directors an opportunity to the notice regarding the cash refund, etc. You should also explain the directors the ethical code of professional body. The ethical code of professional body, for example, your ICSEB, ICAB, ICMA, or IFAC, and you cannot simply ignore the situation. Here we cannot ignore the situation. If you feel the need for resigned order and usual from the unethical practice, then you may wish to seek a legal advice to your employment and whistleblowing rights. We know what is whistleblowing and responsibility and a key potential to much keeps from the legislature. However, resign on the subject taking required action. You should document in detail. So all should be within the document. The step that you take to resolve that problem in case your ethical judgment and challenges in future. So this is a fundamental thing. Just write up, and this write up through your own judgment based on the fundamental principle of an accountant. So number 1 is complete here, and requirement B, if we see here, one company A Limited is want to take over by Ifware Corporation. So what have to do here? Pre-merger EPS calculation and price earning ratio calculation, and also the market price calculation of A Limited, where 6.4 times of price earning ratio, So if we go for the calculation, is the pre-merger. So here, earning after tax, FOI corporation, as per the question, here 5 lakh and A limited 1,25,000 taka, and number of share outstanding here 2,50,000 and A limited 1,25,000. So earning per share here we divided 5 lakh divided by 2,50,000, then we'll get taka 2, here taka 1. So market price as per the question here 20, here 10, and price earning ratio here 10 times and here 10 times. So here if 20 market price per share taka 20 divided by earning per share taka 2, then we will get 10 times. Here same way 10 times. So current market price of A limited, if price earning ratio is 6.4 times, here 10 times. If 6.4 times, so what would be the current market price? So if 6.4 times, then it will get 6.4 times multiplied by 1, because here price earning ratio is 1, then he gets 6.40 or 6 taka 40 paisa is the current market price based on the question given, but actual market price is taka 10. So in this case, what would be the exchange ratio? So here exchange ratio would be, here market price is taka 20 for FOI corporation divided by the A limited taka 6.4, that calculation just now 6 taka 40, then exchange ratio would be 3.125. So 3.125 of share A limited equivalent 1 share of FOI corporation, and post-merger EPS of FOI corporation would be number of share after merger. So what would be the share, number of share? Because 2,50,000 share is existing at this moment, and have to issue a new share for taken over of a company, because here 1,25,000 share and 6.9 as per the question divided by 20, then we have to issue 40,000 new share for acquire the company limited, and total number of share would be 2,90,000 of FOI corporation. So here total income, that means after tax, here earning 5 lakh and plus 1,25,000, so 6,25,000, this one 6,25,000 earning after tax divided by 2,90,000 share, then post merger EPS would be 2 taka 16 paisa. So it was EPS taka 2, but after acquire the company A limited, EPS increased taka 2.2 taka 60 paisa. Desired exchange ratio would be total number of share the post merger company, here averagely 3,1250, number of share acquired to be issued 60,050, therefore the exchange ratio would be 50. So each and every share of A limited, they will get half share of FOI corporation. So this is that one. And now consolidation issue. So here is the consolidation. FOI as a holding company is subsidiary company as per the trial balance given in the question, we have to prepare a profit and loss account, that means consolidation. So here is the consolidation, each and every point including here holding companies column, here the subsidiary column, here is the adjustment is here purchase, that means here giving the sale to the within the organization, holding to subsidiary, taking the profit also. So that adjustment is here, and same way here sale, purchase, everything, and here the minority interest, all calculation here we have to calculate in our khata also, and here is the calculation, how this calculation is happened. So here determine the share of capital profit, P&L account, add current year share. So here everything is doing here, so we have to very carefully calculate all thing, and after calculating all thing we will get this profit and loss account. Here is the profit and loss account, and also we will get the consolidated balance sheet this way. And after consider that means here share capital, equity share capital, and minority interest, that calculated here in step 3. Minority, here is that minority interest calculation, and total minority interest calculation here come from that note 3,60,000. That 3,60,000 putting here, and profit and loss account balance adding current year's profit and get this one, and 10% debenture here, trade creditors, holding company age, subsidiary company total, because it's the consolidation. So here same way goodwill, here calculating is step 4. Here goodwill comes 51,000. How this come? Calculating cost of control of goodwill, share capital, here less the face value, equity and other thing, then we will get 51,000 for goodwill. See this 51,000. And fixed asset, that adding both holding company and subsidiary company, and from that we'll less the depreciation, and total get 18 lakh. Total get 18 lakh of fixed asset. And same way debtors, adding both, and stock, that is inventories both, and from that reserves minus here, and cash, both holding company subsidiary come here. So balance sheet is equivalent. We know that as per the accounting equation, total asset equals total liability plus owner's equity is come here, and 27,61,400 in the both side. So this we have to calculate the consolidated financial statements. And number D, if we see, here is the selling price 21, variable cost 14, total cost ato, sell ato. So here calculating the based on the investment requirement 40%, the credit policy issue, it would be viable or not, we have to report to the board. So this is the calculation here. Present policy is for 1 month credit, and new policy would be 2 month credit. So what would be the incremental? Here calculating the incremental profit this way. Here we said that net profit, and that profit is the return based on the return. Here calculating the, if we consider rate of return additional investment debtors, here come 1,87,500 requirement as calculating, and additional income is come here 1,57,500. So return would be 84%. So what would be the your opinion to the board based on our 40% expected return, but here 84% return comes? So that policy can be taken by the organization for next year. So it would be our executive summaries comment. And also number 5, it was the working capital issue. So optimum output per annum 30,000, and output 12% increase, and that 2,500. So here is the working capital calculation. If we go each and every item, see here is all is the noting here. So here working capital requirement 4,12,500. That amount we will take in our executive summary. So we have to fulfill the executive summaries all 5 items, because first one we have to start this one should be documented, because we discuss this in details step by steps for the problem of that means sale directors argument, and value of the addition of the long term base of the exchange ratio, it should be again taken over of the company A Limited. Same way we have to describe each and every item in our executive summary. So this way we will be able to solve the case study in this way. So we discuss one case study today, and CGA, that means Certified General Accountant, is our final course, and also this paper that is very vital for passing the CGA, but is the combination of all papers, because case study is concerned with different dimension, different way, and different present situation in different industry also, and sometimes in the running condition. So we should very careful, because will get 4 hours for that exam, and basically 1 hour for our just a study and understanding how we'll be able to solve the problems. So a lot of problems is combined here, and we should integrate each and every point, and that integration we will reflect, our integration will be reflected in our executive summary. So I think we will do, if we very carefully do this, and we'll be able to solve all problems, because you takes from your judgment also.